Every week, like many of you, I spend at least 40 hours at my job, working as a nurse. On top of this, I live in the beautiful, sunny city of Phoenix, Arizona, so the cost of living, while not as bad as some places, also isn't cheap. This leaves very little left over to invest. But I can only imagine there are countless other individuals that live the same reality I am. That's what this channel is about, putting the scraps together until we achieve our dreams. Welcome to the Night Shift. Today, we're going to talk about the 4 stocks I bought today with the $350 I had available this paycheck. Just to clarify, when I say today, I do mean March 26th, 2026. I meant to create this video quite a while ago, but life kind of gets in the way sometimes. Because of that, this list is also going to double as my buy list for April, because I'll continue to buy these stocks, at the very least, through the rest of this month. For those of you that just want the stocks, I've left them up on the screen so you can see them now. Before we go into details about each company, if you could please just do me one favor, hit the like button down below so we can add more members to the crew. I would appreciate that so much. And if you haven't already, you should also click that subscribe button down below. It'll notify you whenever I upload future videos, and you can always unsubscribe later if you don't like what I have to offer here. No hard feelings. Good. Now that we got that out of the way, let's get into the first stock, which is going to be SOFI Technologies. I bought one share at $16.31, which puts my total to 240 shares, and I got those shares at an average price of $15.09. Only 3 months ago, we were at about $29 with this stock, which puts us really close to 50% down from the recent highs. I'm buying SoFi because I believe it will be the next major bank, like Bank of America or Chase. The Muddy Waters short report is also helping push the stock down way below where it deserves to trade. Their member growth is still hitting record numbers. Their cross-selling efficiency is improving. Galileo and the loan platform business provide an increasing mix of high-margin, fee-based revenue, which improves the quality of the business. And they've managed all of this while rates have sustained high levels. If the Fed doesn't cut, that's just business as usual for SoFi. Nothing will have changed. If they do cut rates, we get to see the tailwinds of a boom of loan refinancing and hopefully the revival of the housing market. Long story short, I believe SoFi wins either way. I would have bought more if I didn't already have so much, or if I had more money to add to my portfolio in general. The next one, stock number 2 I bought today is going to be ServiceNow. Today I purchased one share at $102.87. This brings my total position to 30 shares, and I've gotten those at an average of $113.16. I really wish I could be buying more. If you haven't already seen it, check out the last video I did where I talk about the reasons why I believe Wall Street is wrong about the SaaSpocalypse. ServiceNow is very special. They act like the nervous system of a company. From IT tickets to HR tasks, the services ServiceNow provide are absolutely critical. With their agentic platform, they will have agents that can perform all of the low-end tasks entirely on their own, allowing human workers to focus on the important and difficult tasks they just didn't have time for before. Could you imagine removing the brain from a human? All jokes aside, I completely agree with Dan Ives. I think this narrative is so blown out of proportion, and we luckily have also gotten all of the geopolitical drama with Iran to create even more fear in the market, and I'm still buying this one very heavily. Alright, the third stock on our list is going to be Everpure, which is formerly Pure Storage. Today I bought 3 shares at a price of $63.90. This increases my total position to 50 shares, and I've gotten those at an average price of $58.39. As of March 5th, Pure Storage, PSTG, has officially rebranded to Everpure. Everpure is an enterprise data storage and management company. Historically, they were a hardware vendor, but they are transitioning the company to be more like a subscription model, where they charge monthly to guarantee massive amounts of data and charge for any amount that exceeds the agreed upon number. Their direct flash modules are currently the most energy efficient, and their data compression allows for easy removal of duplicate information. They are currently undergoing an acquisition to improve their software. If completed, it will allow them to not only store the data, but also label it and categorize it, only improving their usefulness to the hyperscalers. This isn't the only incentive for customers either. They own their own hardware and pay for the electricity their hardware consumes in the data center. Even though this sounds like it could be a negative, they still maintain insane profit margins of 72.1%, and with that last year returned $343 million to shareholders in stock repurchase. That's going to bring us to the last stock I bought today, which is Meta. I put the remaining $10.58 into a fractional share, which totaled about 0.018 shares. I know, it's kind of sad, but again, there's just the reality we live. This increases my total position to about 2.31739 shares, which I bought at an average price of $635.35. I realize the math doesn't fully add up to the 350 here, but I must have had a small negative balance on my brokerage account. This is the remaining amount of the purchasing power in cash that I had available. I know. Wall Street is having a panic attack about the CapEx spend. This has pushed Meta all the way down to an 18.81 forward PE, which in my opinion is just way too cheap. Recently, I've heard influencers like Jeremy Lefebvre at Financial Education say it's possible the big tech companies never return to their high PE multiples because of the capital-heavy shift in their business models. Of course, this is a possibility, but I don't think it'll be reality. I think the benefits of being fully integrated can't even be described. I think if Meta overbuilds, they can just lease out excess compute. I think their margins would be hurt more and for longer if they had to rent compute from AWS, GCP, or Azure, and I think Meta will prove to be a huge winner moving forward. But only time will tell. I just wish I could buy more. I wish I could buy more of all of these stocks, but I'm not rich like the other financial influencers that I admire, so we're doing what we can. Alright, so those are the stocks I bought, and the ones that I will continue to buy for the upcoming month. I'd really like to know what you guys are buying right now. Are there any new companies that have caught your eye? Let me know in the comments. I really hope you enjoyed the video, and I really hope that you learned something new. There are countless opportunities out there, and it's our job as investors to find those opportunities. Whether it's going against the grain and buying Meta or ServiceNow while the rest of the market has a panic attack, or looking ahead and capitalizing on the future of banking with SOFI, or the next bottleneck of AI, which is memory and storage with Pure Storage or Everpure. This is what the Night Shift portfolio is doing. That's going to be all for today. Be strong. Listen to all the noise, but make your own opinions. We're doing great. So keep it up. Shift's over.